To me, exercise 3-15 in the Wiley Plus may be one of the most difficult exercises to be able to complete if you're not given a little bit of a heads up and a start on what they're looking for. So what this company is, and this has to do with adjusting entries, but they make you really look at it in depth. And so let's talk about what's going on here. What they give us are the accounts receivables as of, and the dates are a little old here, but that's okay, we can work with that. They give us we're in the year 2014, so they give us the end of 2013 numbers and the end of 2014 numbers, as well as our unearned service revenue. So items that we were paid for, but we haven't actually done or let the customers have access to the facilities, because we are a membership club type club. And so people in this case have paid us ahead of time, but they haven't received the benefit. I like to think of these unearned service revenues as they call them here, gift cards or gift certificates. Think of it as similar to like the Texas Roadhouse. If you go and buy a gift certificate, you gave them money. Or if you're looking at it from a Roadhouse perspective, Roadhouse got money, they received money, but they haven't done the job yet. They haven't provided any food. So it would be unearned revenue. And then when the client comes in to actually use the gift certificate, then they no longer owe a service. They can then count it, take it out of the unearned revenue and put it into the regular service revenue. So here, they tell us, if we look down a little further, it says you will definitely want to use T accounts for this type of problem. So what I've done so far is I provided some really bare basic T accounts here. These aren't real pretty by any means, but here's our accounting equation. We're going to be dealing with cash here in a few minutes. But it says we started out with unearned revenue of $20,520. That was last year's ending balance, so that's this year's beginning. And we ended with the $17,940. However, there were many items that took place in between here, and that's one of our tasks on this one to figure out what happened. Now, they also give us accounts receivable. So down here, I made an account receivable T account underneath my assets to show what we started with and then what we ended with, and then knowing that there's some things that happened along the way. And then the last thing it says here is the 2014 income statement. So that's this year. The total income statement showed $154,953 in revenue. So that's my total. What I want to be able to figure out as we're going through is, what did I do to get to that total? So that's what our journal entries down here are going to do. So again, it says you will want to make T accounts. That's what we're doing. And so now we can jump in. First one, accounts receivable from 2013 were all collected. So we ask ourselves the two questions. The debit question is, what did the business get? If accounts receivables were all collected, hopefully you think of off the bat, we got cash. So I come down here to journal entry number 1, I got cash, but I just don't know how much. So that's what I have to look up at my T accounts. Accounts receivable from 2013, that would be these guys, were all collected. So if they were all collected, that means I brought in the $84.79. So I'm going to credit my ART account for that $84.79 and put it up here in my cash. Okay, and now I can update my journal entry. $84.79 was what I received. Where did the cash come from? It came from my AR account. So number 1 wasn't too bad. Number 2 is not terribly difficult either. Gift certificates outstanding for the end of last year were all redeemed. So my gift certificates, remember that's a service that I owe. It shows last year I owed $20,520, but now they've all been redeemed. So I need to show that this is gone. I don't owe anybody a service as of for this transaction. So I can go ahead and debit $20,520. That gets rid of all of my unearned revenue. And I can put it right over here. Oops. I can put it right over here in my service revenue account for $20,520. Basically, what the business get, we got a reduction of our revenue, of our liability. Why did I get a reduction? Because I actually did the service. And out to the side, I'm just going to put this in parentheses. This was 2013 gift cards. And you'll see why I'm doing that in just a second. Okay. So now we can do my journal entry. I had a debit to my unearned revenue for the $20,000, and I had my credit was just service revenue, and the amount was $20,520. Number 3A isn't too hard either. It's when we get to 3B and 4 that are the hardest. 3A, an additional $36,638 of gift certificates were sold this year. So I need to ask myself the question, what did the business get if we sold gift certificates? Well, we got cash of $36,638. And how did I get the money? Where did it come from? Well, I didn't provide a service, at least not yet. It came from me having to owe a future service of $36,638. So I can fill in my debit and credit here. I got cash for $36,638. And the cash came from my unearned revenue because I haven't actually done the service yet. Now, 3B is a little tougher, and that's why we had to do T accounts is when we get to 3B, 4, and 5. A portion of the above gift certificates were used during the year. The remainder are still outstanding as of 2014. So I look at my gift certificates. Right now, as I sold those gift certificates, I had $36,000 due. But at the end of the year, I only have $17,000 due. So that means people actually came in and redeemed those gift certificates and used our service. And it's the difference here of what was actually used. So I'm going to bring up the calculator. Probably won't be able to see it, but you can type this in as we go. $36,638 less what we still have remaining, $17,940, shows me that I have now used, or that has been redeemed, $18,698 in gift cards. $18,698. If I take the 36 minus the 18, I will get what I should have, the 17,940. Now that's my debit question. What did the business get? We got a reduction on what we owe, and we owed a service. Why do I have a reduction on the service I owe? Because I actually provided the service. So over here, I'm going to include that 18,698 and show this as 2014 gift cards. So now I can do my journal entry. 18,698 was the dollar amount. I'm going to debit the unearned revenue is what I did up there. And I'm going to credit my service revenue. Okay, number 4, probably the hardest one in my opinion. Services billed or services provided to members in 2014 were billed. So far we've only really talked about people using my business were those who had previously bought a gift card. So 20,000 gift cards were redeemed that were bought last year, additional 18,000 of gift cards redeemed that were bought this year. But all of the rest were people essentially just pay as you go. These people were pay ahead of time, but all the rest of them were pay now, use now. And what we want to be able to figure up is how much did actually people do the pay now, use now. And when I say pay now, I actually mean pay and get billed now, not necessarily pay. So if we look at, I know my total revenue, and I know how much of that revenue came in the form of gift certificates that were redeemed. So basically the missing dollar amount here is how much customers actually were not prepaid customers. So we take the 154,953, subtract out the 20,520, subtract out the 16,698 that were, both of those were gift card revenues. And normal people who just get billed and use the service, well, that amounted to the remaining, a big number, 115,735. So these were our regular 14, I'll just put bill as you go type customers. These guys were all pay ahead of time. These guys I billed as they went and used it. They did not pay ahead of time. Now if I'm billing them, that's the debit question. What did the business get? I got a promise to be paid. And remember, we call that an account receivable. So I come down to my account receivable, and we have 115,000 coming in the near future. So I can go down here and do my debit and credits. I got the AR for the 115,735, and then the service revenue of 115,735. Now at the last entry, accounts receivable for 2014, those billed just recently, were partially collected. So I need to look at my AR account, and I see that I had 115,000 balance in my AR, but at the end of the year I only have $11,000 balance. Much, much better. How much did I actually get from cash? Well, that we just got to take our difference. The 115,735 minus the 11,688 shows I brought in or received cash of 104,047. 104,047. And that gives me my remaining balance of 11,688. And what I actually received at that point then was cash of 11,688. Would have been my, oh no, it's not 11,000. 104 I received in cash. So that's what came off my customer's account. So that would have been my debit here, cash, the 104,047, and then knowing I need to credit my account receivable to reduce my customer's bill by 104,047. Okay, I hope that was a help for exercise 315. Again, that one's a very difficult one when you first look at it, and so that's why I like to go through that one as an example. We'll look at one more example. We're going to look at chapter 4 here in our next video.